Hello, I'm Heidi Pickett, Chief of Staff and SVP of Strategic Initiatives with the TIE, and welcome to our Q3 2024 State of the Polygon call. Today we are joined by Colin, Head of Institutional Capital at Polygon Labs, and Matt, Advisor at Polygon. So we're going to assume our audience has the foundational understanding of the Polygon ecosystem and its unique features. For those of you who are new or need a refresher, please feel free to watch the replay of our previous quarterly webinars or reach out to Colin or Matt for more information. So today's discussion, we have a lot to cover. We'll center around the Community Grants Program, the innovations and security enhancements brought by the AggLayer, and we're just going to discuss some developments since the launch of the Polygon 2.0 roadmap and get a preview of what's to come in the second half of this year. Just as a reminder, please note that the information shared in this webinar is for informational purposes only and should not be considered as investment advice. Okay, with that out of the way, welcome Colin and Matt. Really excited to be here again with you to catch up on all things Polygon. So Colin, let's start with you. In June, you launched the Community Grants Program. Can you provide an overview of this program? Why was it created and what is the mission?
Yeah, absolutely, Heidi, and thank you very much. It's a pleasure to be here. The Community Grants Program is essentially up to 1 billion POL tokens over 10 years, with the idea being that it will support the growth of the Polygon ecosystem, offering grants to builders to seek new and innovative on-chain use cases, and thereby proliferating the Polygon technology.
Great. And then since its launch, how has the community responded? Can you share any early feedback or success stories?
Yeah, I think the response has been, I would call it potentially overwhelming. Like it's really, really positive. People get super excited about it. One of the ideas here is that you could incubate the next like major protocol that comes on chain that everyone gets excited about, like the next Polymarket. I think Polymarket is something that's trending, right? Bet on the election. One company that I would point out, just that I personally really thought was cool and a very nice kind of like crypto native use case, right? People are always looking for like, okay, what's a good utility style use case for crypto? It's actually disrupting traditional ways of business, doing something much better. And that company is actually called Blue Whale. It's BLU Whale, WHALE. What they do is AI personalization. So you can essentially monetize your digital footprint. I think people talked about this a lot, but I feel like these guys are actually doing it pretty well. They have a ton of transactions on chain. It seems like they have a lot of early adoption. So it's one of those like kind of ideas that I think everyone in crypto is like, this should be a thing, right? It's no longer the Facebook model where Facebook and Mark Zuckerberg are monetizing you, and you're essentially getting nothing in return for contributing to their network. So this is the counter to that. And I could actually even run through some stats in terms of like impact so far. So we've had 250 applications. We've given 25 grants. I can break it out. Like I've got all the data in front of me. We've done six to AI X crypto, 1 to decentralized social, 5 to gaming and autonomous worlds, 3 to NFTs, 1 to content co-creation, 5 to digital and physical intersections, 2 to distributed communities, and 2 to gamified commerce. And I'm sure that there is a ton more behind that, given that it is up to 100 million per year.
Wow. And what criteria is being used for projects, in terms of getting funding? And yeah, I guess that's the question. Like anybody who's listening in that wants, to be part of this program, what should they be thinking about when they submit their application?
Yeah, it's super interesting. It may be not what people often think, but when Polygon looks at opportunities to fund or to give grants, what we want to do is create a flywheel of ecosystem adoption, bring use cases that get more people on chain, and maybe even have a springboard of multiple use cases from the initial use case. So for every, call it like dollar that gets put in as a grant, it kind of returns 10 to the ecosystem and so forth, and then allows the additional grants to come from the additional revenue and thereby propagating an ecosystem that becomes just a global, like one of the main kind of layers out there, and ultimately benefits everybody in that ecosystem. Hopefully that was a decent answer. I would say, so 1, kind of the flywheel effect, and 2, transactions on chain. Like how many transactions do we expect this protocol or app to create for the Polygon ecosystem as a whole?
Yeah, that makes sense. And then I guess there's two distinct tracks, my understanding, the general grant track and the consumer crypto track. What kind of, can you talk about the differences there and what kind of projects? I know you'd broken down like sort of the stats across the different narratives or verticals, but, are there any particular projects that you're hoping to attract in each track?
Yeah, so we have what we call seasons. So each quarter is a season. The first season is focused on consumer crypto. So in my mind, just a classic example, it'd be like a friend tech. And then after that, of course, we want to serve the global population, not just consumer facing. But ultimately, like down the line, there's going to be things like DeFi, DePIN, NFTs, kind of all the classic verticals within crypto. We do want to cover the whole gamut of crypto ideas and ecosystems.
Nice. And then this may be pretty unique, but the funding framework is open for community feedback, is my understanding. So what kind of input have you received so far? And are there any planned adjustments based on this feedback that you're aware and can share with us?
Yeah, the feedback, I probably won't share anything specific, but I would say generally, right now, there's a community treasury board. The whole thing is driven by the community. And the forward vision is just to make it more and more decentralized in the future. So I'm just going to share kind of high level comments because I don't have the kind of individual feedback lined up in front of me.
Yeah, no, that makes sense. Certainly an exciting development for growing the ecosystem. So I'm sure there's going to be lots to catch up on in future calls in terms of the success stories. So thanks for sharing about the new program on that front. Matt, let's bring you into this discussion. Would love to talk about the AggLayer and the concept of the pessimistic proof that was introduced in May to enhance the security of cross-chain transactions. Can you explain, how does this mechanism work? What makes it a novel solution in the blockchain space?
Thanks, Heidi. So zooming out a little bit, it's helpful to think about what is the AggLayer trying to accomplish. And really what it's trying to do is unify liquidity, users, and state across multiple layer twos. And part of how it accomplishes this is through a unified bridge. This is pretty advantageous relative to a third-party bridge because in third-party bridges, you either have to mint synthetic assets, so it's not canonical, or you have to have like a fair amount of liquidity provisioning on both sides of the bridge. And so by having a unified canonical bridge, you can have better liquidity without like making it so capital intensive. And so that's sort of like the overall goal, is to create a safe way for all of these chains to interact with each other. So one of the things that we think about as sort of like a primary risk of a unified bridge is, what if a chain goes rogue, right? Like what if there's a malicious chain and it tries to, say, extract all of the tokens from all of the other chains and bridge it out to one of their users, maybe the dev, whatever. And so that's sort of like the problem that the pessimistic proof is trying to solve, is giving a way that using cryptography, we can prevent any of these chains from draining the rest of the system. And so like without this mechanism, a malicious actor on one chain could potentially exploit like the entire thing. So it's naturally like very, very important that we think carefully about how we implement this. And so the AggLayer has always lived as sort of this idea that like we're going to use ZK to bridge all of the chains together. The pessimistic proof, I would say, is more of like closer to like a precise specification of how we're going to do that. And so we call it pessimistic, right? First, like what is this word? The idea is that we want to assume no additional trust assumptions. So if we're basically treating every chain as a potential bad actor, we're not placing any trust on any part of the system. And I think that's like really crucial, good security design in cryptographic systems, right? And so with pessimistic proofs, one chain's issues can't like contaminate the rest of the chains on the bridge. So how does it work? So I'm going to get a little bit technical here, but I have to. I'm sorry. Hopefully I can help put this in words that the listeners can understand. So each chain maintains something called a local exit tree. And this just tracks all of the withdrawals from that chain. So, you bridge USDC into the chain, you bridge ETH into the chain, you bridge meme coins into the chain, as I would. And then you bridge out, right? And you can either bridge out to the L1 or you can bridge out to another layer 2. And so basically, this is almost like a ledger in and of itself. It's an accounting system. It's a way to track withdrawals from each of the chains. And then, so we have the local exit tree living at the chain level. Each chain is sort of keeping track of that, and the AggLayer is as well. And then using what we call the root of that chain's local exit tree, the AggLayer can build a global view of all of the withdrawals from all of the chains on the unified bridge, and we call this the global exit tree. So we have a whole bunch of local exit trees, one for each chain in the system, and then you sort of aggregate it all together into the global exit tree, and then that commits down to the L1. And so when you want to withdraw your assets out of the ecosystem down to Ethereum, they have to pass through the global exit tree. And so for each attempt to withdraw assets from one chain to another, the AggLayer generates what we call a pessimistic proof. And so this requires 3 inputs from each chain. So the first one is the chain's most recent local exit tree. So the last confirmed real state of the world in terms of what assets had been withdrawn and deposited so far. So you start with okay, state A, right? There's been 1,000 USDC deposited and 100 USDC withdrawn. Then you have the list of new withdrawals included in the update to the local exit tree. So say I'm trying to bridge 100 USDC off. So we've got 1,000 deposited, 100 withdrawn. That's the start. Then we have an update to withdraw 100 more. And then we have the new expected local exit route. And using ZK Tech, we can verify that all of the withdrawals are actually valid. And so, if I try to withdraw 10,000 USDC, there wasn't that much on the chain to begin with. And so the AggLayer will reject that pessimistic proof because it won't be valid. So to recap, we have the start state, we have the update, and then we have the end state, the new expected local exit tree. And so this is the AggLayer's way of interrogating each chain to make sure that it's not trying to withdraw more from the bridge than has been deposited. And so we talk about ZK Tech verification and all that, but what are we actually checking here? So we're checking 3 key pieces of information. So first, we're checking that the chain updates have been done correctly. For example, maybe there's 1,000 USDC and 100's been withdrawn, and I'm trying to withdraw 100 more, but it's not in my account. That would be an invalid state transition, and the AggLayer would go ahead and reject it. If we're trying to apply an update that's not being executed correctly. Number 2, we're trying to check that the chains are doing their internal accounting correctly. So that's they're not trying to withdraw tokens that they don't have deposited onto the chain. And then number 3, we're looking across the AggLayer is looking across the whole ecosystem and checking that all of the chains are doing their internal accounting together correctly. This is very important to maintain the balance of assets across the entire system. And so in short, basically, the AggLayer just checks, it's pretty simple. It's checking deposits and withdrawals. And then anytime you're trying to update those numbers, it's checking to make sure that they're being updated correctly. And then finally, it's committing that down to the L1, right? And when it does that, on the way in, it has to check all of the local exit tree updates, making sure that they're valid, checking, and then it checks the new local exit trees, making sure that they're valid, and then it updates the global exit tree to make sure that's also valid. And that's what ultimately allows users to deposit and withdraw assets across all the different chains. We had a term for it earlier, which I liked a lot. It was called chain level accounting. And I feel it really expresses what we're trying to get at here. And it sounds simple, right? It's of course, the deposits and withdrawals of a chain should match, right? But in practice, codifying this stuff into ZK proofs is actually the magic that's happening here. It's making sure that you can't violate any of the accounting rules. So, FTX style or banking system style. You don't have any like malicious activity where assets are being rehypothecated or used improperly or withdrawn to someone who doesn't have the right to access them. And so the whole thing that we're trying to build here is the most secure interoperable system. And ZK is really like the tool that we're using to make sure that every chain has to act according to the rules. And so it's a little bit like checking out at Costco. You check out at Costco and they check your receipt, right? And they try to make sure that you're not buying things that you didn't pay for, that you're not, that you're getting all of the things that you paid for, that everything's being done correctly. I think of it a little bit like that, right? And then you're allowed to exit the store. And so, it's easy to think, oh, Costco thinks I'm shoplifting, right? But in practice, in the crypto world, you really do have to think pessimistically about every single person and every single chain, because this is just like way too much value at risk to risk, not treating every chain pessimistically. And so it's a little bit of a play on words. It's like, you have the optimistic view of the world, which is much slower. And then requires like many more additional trust assumptions. And then you have this sort of pessimistic view of the world, which is ZK driven, where by default, you're double checking every single operation happening throughout the system so that there's no single point of failure that could impact the collective safety of the ecosystem. So that's sort of like what the pessimistic proof is. And it'll be generated by SP1, which is a product from Succinct Labs. This is maybe a good point to talk a little bit about Plonky 3. Mm-hmm. So Plonky 3, we actually just announced this, I think, yesterday. It's now production ready, it's open source, and it's the newest version of a proving system. So a while ago, we released Plonky 2. And basically every ZK project in the space is based on Plonky 2 as a proving system. It's super efficient, it can run on consumer hardware, it's optimized for things like recursion. But what we found is that for a lot of use cases, those optimizations were kind of constraining, and people weren't able to fully express all the different logic that they wanted to. And so what we've done now is re-implemented the entire thing, basically. And we've created this new proving system called Plonky 3, and it super efficiently proves, arbitrary amounts of computation to allow people to create ZK EVMs, ZK other VMs. And we're very, very excited about this. So a big part of our ethos at Polygon has always been creating and contributing the best tech. And we've always said, like, we're super open-minded. If there are other proving systems that are better, we'll try and migrate our tech stack to use them. And so this is our sort of latest step in that journey of trying to contribute all of the best ZK tech that we possibly can in order to create better systems that are safer and ready for like true mass adoption, to help like ultimately scale Ethereum, which we haven't said those words in a while. Not related to the price of ETH at all. I'm just kidding. So anyway, so Plonky 3 is really like this proof framework, but it's not super easy to work with at like a very basic level. Most developers that don't have experience in ZK are going to have trouble implementing it. That's where Succinct comes in. So they create tools that allow developers to more easily build on top of the proving system. And so we're very excited to be working with them. They're like top notch, like best in the business. And so really that new proving system is what allows for, there's a huge amount of compute being executed here. If you think about proving the state of every chain, the state transitions of every chain, the end state of every chain, aggregating it all to like the global exit tree, like this is just like an enormous amount of compute, and we need a proving framework like Plonky 3 that's super high performance so that we can actually execute this stuff. But moreover, the AggLayer, right now we're building it with like effectively ZK VMs in mind. But someday we'll have other chains, we'll have other virtual machines. We're working on one called Maiden, which is like really, really cool. I don't have time to get into it, and I don't know if it's the right topic for the audience because it's super technical. But someday we're going to need more flexibility of what we're proving into this aggregator system, of what we're proving into the AggLayer. Plunky 3 enables us to add that flexibility to prove ultimately like any EVM chain, any zkVM that fits within the proving system. And so it's sort of like, if you think about it, it's like the common language that every participator in the AggLayer is going to be able to speak, so that we can verify states and state transitions across all the different chains in the ecosystem without locking developers into like a specific set of tools. This is like in like sharp contrast to something like Optimism Superchain, right? So Optimism Superchain, the state transitions themselves are being generated by like one central party, the centralized sequencer. And we don't like that approach at all. We want to enable developers to build however they want, to operate their own hardware, to operate their own, ecosystems with service providers, whatever. And so by having a shared, instead of having to have like one centralized entity that's creating the new blocks on all of these L2s or bundles or whatever you want to call them, that's like sequencing all the transactions and submitting them, we no longer have to have that, right? It's sufficient for us to just check the execution is being done correctly. And the only thing that we require is that effectively Plunky 3 is sort of like this base language that everybody can speak. And that's ultimately what enables greater flexibility within the Polygon ecosystem. I rambled for a long time there. Does that make sense?
That was great. I always appreciate your ability to take what I think is complex technical speak and bring it down to my level and probably a lot of the level of our viewers. So, but yeah, I think it makes complete sense. A lot of progress has been done I can tell, since our last call. So it's very exciting to see. Just like looking ahead, what is sort of the future, what future developments over the next quarter to 2 quarters, can we expect from the AggLayer and its security mechanisms? What should we be paying attention to? How will you be measuring, sort of if this is living up to what you wanted to achieve?
Yeah, it's a good question. So I think it's helpful to first talk about like where are we in the journey, right? So we've rolled out AggLayer v1. So initially, each of the chains was settling to Ethereum using its own L1. And so we have like, a bunch of chains that are live today. We have Polygon zkVM, we have immutable zkVM, which has had like insane traction. It's like really amazing to see. We've had A-Star, zkVM, OKX's AggLayer, and a litany of other chains, right? I like don't have time to even mention them all. And initially, Polygon zkVM, for example, it was proving down to the L1 directly. And so when you think about that global deposit withdrawal thing, right? This whole thing only works if that lives in one part of the Ethereum L1. And so the first thing we rolled out is AggLayer v1. This is like a shared deposit withdrawal contract that handles the chain level accounting for each of the chains in the ecosystem. This was like a really big step for us. It sounds small because like, what's the difference, one contract versus multiple contracts? But it really lays the groundwork for what we can build on top of it, which is this single unified bridge where all of the assets are truly canonical because they refer to assets that are available down here at the L1. So that was V1. We rolled it out, I think, a few months ago. And it's actually very cool. You can go on the Etherscan and you can see the number of chains that are connected, right? And it's a parameter that updates like in real time. It's like really, really cool. So that was the first big step toward this. The second step is announcing and sort of specifying how these proofs actually work, right? And I think with the pessimistic proof, we've taken a step in that direction as well. From there, we'll have the actual rollout of the AggLayer. So like, this is critically like security important, right? This is like something that you really don't get a chance to do twice because there's real assets on the line, and we're trying to really take our time and make sure that we get it right. But I think with the rollout of Plunky 3, the tech sort of becomes ready for us to start prototyping this and eventually roll it out to mainnet. And so right now we have this unified bridge, but it doesn't use that proof aggregation. And so it's not fast to send assets to one another. You sort of have to send this transaction to the L1 effectively that adjusts the chain level accounting at that contract level. Things don't really live in the aggregated world yet. So going forward, I think, the big thing to watch out for is as we get closer, we'll start to see prototypes on testnet. We'll start to see more chains joining this AggLayer v1. And then ultimately, we'll see the rollout of AggLayer v2, or the fast AggLayer, as we call it internally. And that'll be the moment when you can really start to see cool front ends that really impact the user experience start to get rolled out. And so if I were applying for a Polygon grant in the grants program, one project that I think might have very strong product market fit with the grants committee is a wallet that does abstract away all of the different chains, right? So that you truly feel like you have this unified balance that lives on in the Polygon ecosystem, regardless of what actual chain it's on, because finally you have this single unified, safe interoperability mechanism that allows you to transfer assets without thinking twice, without taking on additional security assumptions, without worrying about liquidity, to really have that canonical asset that lives across all the different chains. So if your USDC is on chain A or chain B or chain C, it doesn't really matter, right? And I think a wallet, we talk a lot about chain abstraction as an industry, and this was a very hot topic at HCC last week. But in practice, the rollout of chain abstraction is very much up to the wallet provider. That's ultimately where the user interacts and where they're going to notice chain abstraction versus lack of chain abstraction. And so with the pessimistic proof and the Polygon AggLayer, finally we have a responsible way to abstract away the chain in a way that we previously really couldn't, right? It's just way too many levels of trust assumptions involved in bridging today. And I think that's why we haven't seen really strong adoption of chain abstraction to date. I think most wallet providers would feel irresponsible not showing people which chains their assets are on, right? Because we don't know what those trust assumptions are. As we start to remove those trust assumptions, though, you can start to build a safe multi-chain experience where you really do abstract away what chain you're on. And I think that's going to be a huge product that will have really big implications across the space. And then, I think be on the lookout, this is a bit of an awful leak, but be on the lookout for other chains that have their own communities, that have their own ecosystems. We have our type 1 prover. It allows for us to prove any EVM chain, right? So any EVM chain theoretically can participate in this unified liquidity experience. And I think we're going to ultimately see a lot of chains that are built on alternative VMs or alternative stacks or as part of alternative ecosystems start to realize that they would be better off being able to tap into the liquidity and user base and community of the AggLayer. And so I think that's one other thing to watch out for.
Yeah, very interesting. So it sounds like you're coming at this both from a developer perspective, but also from the end user perspective and really creating that seamless experience.
Yeah, I mean, ultimately it's about giving a good experience to the end user, right? That's sort of been Polygon's, key to success so far. I think when we initially released Polygon POS, I guess that's one other thing to look out for, the transition of POS to a ZKL2. I think we're expecting it sometime in Q4, maybe Q1. We have a lot of other stuff going on. When we first rolled out Polygon POS, the real key to user traction and product market fit there was that people wanted to use Ethereum and it was too expensive and too slow. And being able to provide, initially it was things like DeFi experiences. Later it became gaming and NFTs and SocialFi and all the good stuff. Being able to provide that for cheaper was something that there was real end market demand for. And I think, a lot of what we've seen get funded or built in the crypto space over the last couple of years has sort of been infrastructure. And infrastructure is obviously crucially important. It powers all the good user experiences, but people are sort of feeling this sense of frustration where they're like, I haven't seen a new app that I want to use in a while. I haven't seen like a new fun thing to do on chain in a long time. And we've been funding all this infrastructure. And I'm hearing about nothing but infrastructure and infrastructure tokens. And like, when are we going to get cool new apps? Because ultimately it is about the user. And I think right now we're at a point where finally the level of infrastructure available is reaching that like critical point where it starts to inflect a bit and you can really build good user experiences on chain. So I'm very excited about that. And I think, that's part of what makes CK important is the respect for the user too, right? Like not introducing additional trust assumptions without telling people, right? Like really making sure that we're protecting the user so that they don't have to think about all this stuff and they can just safely use whatever chain they want to.
Nice, thank you. Colin, let's bring you back into this conversation. And I want to talk about institutional adoption, that's given your role and what you're doing to increase institutional adoption within the Polygon ecosystem. You have posted extensively about Polygon's role here. Can you share some insights on how Polygon is driving institutional adoption and what are the unique advantages that you offer institutional players? Would love to get start with the higher level and then we can dig down deeper.
Yeah, sounds great. I would say two things to start. One, we fielded a global team. So for instance, we have resources in both APAC and Europe that are dedicated specifically to the institutional effort. So when institutions are collaborating with Polygon, they really do have kind of a white glove, high touch level of integration with the technology in terms of like education. And the second one would be a natural pool of liquidity. So Polygon has the second largest community outside of Ethereum, leads to a natural pool of users that are doing all kinds of different things on chain. And so when institutions think about kind of which chain to collaborate with, Polygon often comes up because of that, what I would call depth of book in trading terms, right? Just natural liquidity. So it's a big focus for us. We have a large team focused on it, and it's a natural place for liquidity. But even more than those two, I would say we have a product called CDK, the Chain Development Kit. And I believe that product really allows banks for the first time to participate in a meaningful way because they can spin up their own chain where they have full control. They control the validator set, and it future-proofs their operation by allowing connectivity with public chains and broader blockchain ecosystems in a future state. And as one example, you could be a very traditional bank running Hyperledger Besu. Actually, this is not even CDK related. The fourth thing I should mention is actually the AggLayer, but it's a little bit of this is going to be a future concept that we believe creates a global financial layer. And that is such, as I started to allude to, where you could have a private instance of Hyperledger Besu and ultimately have connectivity to more global liquidity pools through the AggLayer.
So it's interesting that you mentioned Polygon CDK has, I think there was a recent announcement around Fox Corporation, an update to Verify protocol and using Polygon CDK with Time as its first external media company to utilize Verify. Can you kind of give us more details from your perspective on what this all means, but and more importantly, what is the significance of this partnership and how does it leverage Polygon's technology?
Yeah, it really leverages zero knowledge for authenticity and verification, as probably the title would point out. I think everybody's going to be able to see how big this is, or not big, in the current presidential election atmosphere, right? There's a lot of ideas around, is this real? Is this adulterated, altered, fake? And I think for the first time, this technology offers a way to prove out some of that, i.e. if, let's say CNN issues a news piece, then the voting public can authenticate it on the blockchain for the first time. So hopefully it's a super cool use case. I actually personally think longer term, it's going to be critical to allowing people to differentiate reality and align on reality. As global users of the internet, you can wind up in these pockets where you're in an echo chamber where you only hear a certain tune, and it can, I mean, this is probably highly debatable, but it could allow people to have just a completely alternate version of reality than other subsets of the population. So if you think that that's a bad thing, maybe for democracy or at least cohesion, then hopefully this technology supports eliminating some of the challenges around fake news.
Yeah. Definitely an interesting time, and probably a good time to be introducing this. So looking forward to staying posted on that front. And then, going back to sort of, I alluded to, you're posting a lot on social and such, a lot of announcements about tokenization on Polygon. Can you elaborate on some of these initiatives and how sort of they're transforming traditional financial assets into digital ones using Polygon blockchain?
Yeah, absolutely. I think everybody that's following the story has probably seen the recent releases, right? Kind of the big names that have so far announced that they've come on chain. The coolest stuff is things that we can't quite talk about yet. And every month, every quarter, I'm just really excited about these things. But the reality of large traditional financial regulated institutions is that it just takes them longer to get there. One thing that I think is really cool that I believe will be coming out in the near future is we'll have a major global bank essentially offering bonds on chain to their entire client base for the first time. What that is meant to do is to attack that pain point of costs, whereby the on-chain offering will allow 30 to 50% in cost savings, which can ultimately be passed on to the end user. So it's a big concept. It really has yet to hit the market because of obstacles due to regulation. But I do personally foresee those obstacles being removed, especially ex-US in the near term, and a lot more of this idea actually coming to fruition, a lot of the cost savings being realized. And I think everybody will see a lot more announcements and signs of traction that this actually is happening, this rewiring of the global financial markets on blockchain. So I would love to talk about that, but unfortunately, most of it's going to have to wait until our next call.
Okay. Well, definitely we'll stay tuned. But you can talk about Franklin Templeton, though. And they've launched the Franklin on-chain U.S. government money market fund on Polygon. How do you see this move? How significant is it? What more can we expect? What are the benefits in your mind?
It's highly significant from the standpoint that Franklin Templeton was a first mover. I've spoken with the team there about the length, the duration of their struggle with getting regulators comfortable with what they want to do. And so from the perspective that they're breaking ground for everyone else, it's highly significant. What's happened so far on chain is not even near, it's still very, very early stage. So you're not seeing the massive cost benefits and all the things, that the transparency and transferability that is the eventual idea where we want to go with all this stuff. But they were, massive credit to that team. They were really the first to break through a lot of barriers for everybody else. And I think they're probably just getting to a place where there might be an inflection point where there's kind of like broader use cases for what they did in crypto. But for now, I just think we have to give them a lot of respect as kind of an OG.
Yeah, nice. And the barriers is, to do more of this, is it simply regulation, or is it also sort of connecting sort of TradFi systems to newer technologies or internal approvals, or, in your mind, or what you've been dealing with in these conversations? What are the biggest obstacles to further adoption?
It's a mix of both, but I would say if regulation was more conducive to crypto adoption, they could move. They could move pretty quickly because they've been working at this stuff for quite a while. Their team is really, really strong. They know the tech really well. They could probably implement quickly, assuming we had, a change in the regulatory environment.
all about regulation. Okay, well, we'll have to table that for now, but hopefully we'll have some clarity soon. And then, thinking about this past year and the Polygon 2.0 roadmap that was launched, maybe just Matt, maybe you can fill us in on just sort of like where are we at? What have been some of the significant achievements and developments, and where are you going from here? Or where are we going from here?
Thanks, Heidi. So I think, we've had a little bit of time to digest and reflect on what is Polygon 2.0 and how do we conceptualize the different areas. And I think, one of the things that sort of went under the radar at the time was that this is like a very fundamental reframing of Polygon from a chain or a builder of a couple of chains to a builder of infrastructure that allows for ultimately infinite chains to, or flexible chains, right, to join the Polygon Ethereum ecosystem. So I almost conceptualize this whole thing as a very core part of the Ethereum scaling roadmap that will enable the state of the world for L2s to evolve, right, from the current highly fragmented, very difficult UX state to one where it's much more seamless and it's easier for people to become part of the Ethereum ecosystem, regardless of like what chain the app that they want to interact with is living on. And so as part of that, the first thing to really call out in terms of progress is the Polygon CDK. Because, it's no longer like Polygon POS and Polygon zkVM, it's like a lot of other chains. So it's, I think over a dozen announced so far, maybe 24. It's also, a pipeline of internally, we're looking at a pipeline of like over 100 chains, right? We're really building to scale here and to scale like highly horizontally. And so Polygon CDK gives L2 builders a very easy to use framework for deploying their own layer 2. And I think prior to this, each ZK-L2 launch was like something that took hundreds of millions of dollars worth of R&D. It took huge teams. It took years to roll out. And we simplified that to make it very easy for any builder that wants to deploy an L2 to choose to deploy a ZK-L2. And so that's a really remarkable step forward in the tech. And I think we would be remiss not to like first call that out as like the first step in making this whole vision possible, is making it easy for people to spin up L2s or to like integrate with the prover or whatever, right? And so that's sort of been the first area of focus. And then I think, internally, this is, in the weeds, right? But also getting the word out and getting people to adopt this, right? Because when you have very strong chains like Immutable zkVM or OKX's AggLayer or A-Star zkVM, like those are flags to a lot of builders that like, hey, if you're building an L2, you should really take this seriously. There's going to be a lot of organic users of these chains. And if high quality teams like these are choosing to build on Polygon CDK and in the AggLayer ecosystem, you should also think about that, right? And so a lot of it comes down ultimately to like, it's great to have great tech, right? But you need to build up that user base. And so we've had a pretty big effort internally from the go-to-market perspective of reaching out to people that are building these new chains, reaching out to people that have chains that they implemented as layer 1s that want to transition to layer 2s, right? Things like Canto. And I think that's been like a big undertaking, is like not just rolling out the tech, but building out the core communities so that people know that like when they choose to use it, like it's not just going to be a ghost ecosystem, like it's really real. And so that's sort of like the first area is Polygon CDK. The next one to call out, I would say AggLayer v1, right? So setting up the smart contract system on Ethereum so that all of these L2s really do settle to the same place. And when you generate and submit like these aggregated proofs, they have a place to go. and that it's possible for different chains to actually settle to the same smart contract and really unify that liquidity. And today it's slow, and we debated whether to call it V1 or to call it something else, but we settled on V1, which is the shared deposit withdrawal contract on Ethereum that will ultimately be home to where the aggregated proofs are submitted. In the coming stages, and we've made some progress here, I would flag like the Pol token transition, right? It's been a little bit on the back burner, but because we've had so much else to focus on, but it's also because when you do a token transition, that impacts an enormous number of people, right? There's people that don't interact with Polygon at all, but they interact with Matic, right? There's people that stake Matic, right? But they aren't users of the POS chain. There's speculators, there's exchanges, right? There's bridges. And we really wanted to take our time and source feedback from the community, because ultimately it impacts everyone. And when we introduced the Pol token white paper back in the day, it was it was a proposal, right? It was something that we wanted to put up for discussion within the community. So we've had lots of communication on our governance forum and social media and Twitter Spaces and all of that. Just to try to gauge the temperature, try to figure out what did people like about it, what did they not like about it. I'm the first to say that I didn't like that white paper, but I think it was modeled with a lot of false precision, right? So as a member of the community, I can go onto the governance forum and be like, guys, this is a really falsely precise white paper. What are we thinking about truly when it comes to tokenomics here? How do we see this actually modeling out going into the future? And so I think it's been a little bit on the back burner, but a little bit purposefully as well, because that's the only way that you can give enough time to actually percolate these ideas. And I think so far feedback from the community has been quite positive. I think the thing to keep in mind about Pol versus Matic is that when we released Matic, right, back in the day, we knew that there was going to be more than one chain, but we couldn't really construct the tokenomics to reflect that, because first things first, we had to roll out this POS chain, get that adoption, get the user base, get the community, get builders to deploy there, and then once we saw product market fit, we were able to raise through the round that we did at the top of last cycle, and then acquire the ZK talent that we needed to scale in the way that we feel is truly sustainable and safe for the end user. And so at the time, we had sort of discussed could we have some kind of token supply increase based on the number of chains that are around, and I think it was a very modest single-digit % or something for each incremental chain that we roll out. And so had that gone forward, we would have had a larger circulating supply of Matic when we launched Polygon ZK EVM. But the way we went live was on Binance Launchpad, and for a lot of users, it was hard for them, or investors, or community members, it was hard to gain confidence in a token that natively had the ability to mint more tokens, because how do I know I'm not going to get rugged, right? And so we ultimately decided to do this in 2 stages. So the idea was, first, we would have this fixed supply Matic token, and that would be enough to kickstart the ecosystem and grow the community. And I think it worked extremely well, right? But then going forward, obviously this isn't enough, whether it's economic security or the supply and demand dynamics. It just wasn't built to support multiple chains, let alone the staking hub, which is our sort of bigger vision for how Pol can secure not just POS or the AggLayer or a decentralized sequencer on Polygon ZK EVM when we're ready for that, but truly any decentralized service that needs that security that people want to build in our ecosystem, we wanted to be able to provide them effectively security as a service, right? This is pretty common across the space. you have Cosmos Hub talking about shared security. You have AggLayer with restaking. It's not like a super new dynamic, but we wanted to make sure that we think about the builders first and foremost. And in order for that to happen, like we needed like a more flexible tokenomic model. And then the sort of, so that's sort of like the background. And I think the transition from Matic to Pol is ultimately the realization of that next phase of Polygon building, enabling the tokenomics to better reflect what we're building here, right? It's not just a single chain, it's like a huge ecosystem. And you can see that today. We have so many chains live in the Polygon ecosystem already, and we're just at step one, right? So that's sort of like a little bit of background to help better conceptualize what this change is for. And one of the key things that it does is it creates a little bit of inflation. It's super, super modest. And the idea is that can help incentivize things like the community grants program, right? To make sure that we continue to attract the best builders in the space, right. Whether they're building apps or L2s or customer-facing software. We want to make sure that we have that flexibility in token supply to help expand the Polygon technology to the world, right? And I think if you do like the cost benefit analysis of having like a very small amount of inflation relative to like the benefit that we get from having these builders in the ecosystem, it's like a no-brainer. And so I think overall that's sort of where the community has landed as well. And we went forward and built and audited and deployed the Matic to Pol conversion contract to give everyone lots and lots of time to double check the code, to do their own internal audits, right? Because it's such a massive undertaking. Like imagine like every custodian, every wallet provider, every bridge provider, every staking provider, every DeFi protocol, right? Having to adapt to this new token, you want to give people a lot of time to verify that it is what they want it to be, right? And so we rolled that out just to give people a ton of time to get on board. We've been, talking to the community, making sure that everyone's comfortable with it. I think largely the response has been very positive. And the next step in that journey is the transition from Matic to Pol as the staking token for POS. And a lot of people ask, what do I think the rate of conversion is going to be? Do I see everybody doing this all at once? And the answer is yes, absolutely. People are going to do this all at once because there's a huge economic incentive to stake Pol if it becomes a staking token, especially because, imagine only 50% of the Matic supply gets transitioned to Pol and staked. You're going to earn twice the validator rewards, right? It's going to look super attractive. And so you're going to have, this is probably going to be like a great arbitrage opportunity for liquid funds, right? To like borrow Matic against their Pol, turn it into Pol, and print on the validator rewards. And so I think the economic incentive is going to be very strong. And I think we'll see like overall like very, very wide adoption. And I think, very quickly what you're going to have is like exchanges that offer staking are going to have to transition to Pol. And then if they're transitioning their staking program, they should transition the order books, or they should like communicate with their market makers to make sure that they understand that there's this new token that's going to see much higher trading volume. And so I think very quickly we're going to see a successful migration from Matic to Pol. And that's sort of like the next step. And I think that's roughly slated for Q4, but it's, I feel bad because I can't give hard deadlines or timelines. This is like the most asked question that I get. But we once more, we can only do this once, right? And we want to make sure that we're not missing anything, that everyone's on board and comfortable. So that's the Matic to Pol transition. So we've made a lot of progress there. All the tech is ready, right? It's just the sort of softer community stuff, getting that in place. And then also we have the transition of Polygon POS to a layer 2. We talked a little bit about this. We're thinking Q4, Q1. That's really complicated, right? That's like a huge lift. It's as big as I would argue the Ethereum merge was. But it's really important, right? Because we need to like that's so much liquidity, so much users, so much activity, and we are really gonna like, fire up the Polygon aggregator layer like ecosystem when that ultimately happens. And so that's the other thing to keep an eye out for.
Wow, a lot in the pipeline for sure. And thank you for trying to give us a date on the transition. That was definitely going to be a question I was going to ask you. So, but it sounds like we still need to kind of watch for when that becomes official. Colin, let's, in our final minutes together, would love to, we have a good sort of looking ahead in terms of the tech side from Matt. Would love to get your input in terms of what should we be paying attention to over the next quarter to rest of 2024 from an institutional adoption front or otherwise in terms of ecosystem growth.
Yeah, I think you're going to see a lot more a variety of projects coming on chain. There's going to be new and interesting things to do from the traditional finance channel as use cases that have been in the works for a year or two come online. And it's going to be the same more broadly in the ecosystem. There's just a lot of really cool, large scale, what I think are industry disrupting collaborations to be announced. So it should be an exciting, kind of from now until the rest of the year.
Amazing.
I would also flag, there's an extremely powerful, exciting thing happening over the next quarter, which is the US election, right? And Polymarket is just such an insane success story. It is like one of the most liquid markets where you can bet on the most niche aspects of the election. And, prediction markets truly represent like a very different a very different form of market relative to like traditional financial markets, right? Like they can encompass effectively the world's information quickly and with very high liquidity and efficiently. And it's pretty interesting to see people start tweeting over the last few days, like, oh my God, I forgot, like I was trying to use Polymarket, I forgot they're on Polygon. And, that really puts it in a nutshell, right? Of like, there is so much to do on Polygon or in the Polygon ecosystem that an app like Polymarket, which is arguably like the biggest mass adoption success story in the entire industry, is something that people can forget, right? And I think that, once people bridge their assets over, they're gonna start remembering, oh yeah, Polygon has this other interesting thing going on too. Maybe I'll participate in that, right? And, if they're waiting to place a bet, they put their tokens in the Polygon DeFi ecosystem, which improves liquidity, right? And once you have those tokens bridged over, it's a very like sticky thing, right? And I think, or like say you bet on the vice president pick being like correct, right? And you like earn a bunch of money. What are you gonna do with that now? Well, what about meme coins? What about NFTs, right? And so I think Polymarket has the potential to be like an enormous like reinvigorating factor in Polygon's like consumer adoption over the next few months. It's just a huge success story.
Yeah, it's I'm on there daily watching. It's a very cool place to be. I think though, to your point, I get where you want everybody to know that it's on Polygon, but on the contrary side, the fact that people don't even recognize that it's on a blockchain and it's becoming so popular, I think shows a kind of a further sign of adoption and like ease of use. So I feel like there's a little bit of a positive story from that front, but I get you want to get the credit and get those users into different applications on Polygon.
Yeah, ultimately Polymarket's success is theirs, right? I think Sandeep tweeted about this. Like the chain can help, but it doesn't make such an enormous impact. It's really up to the product and their go-to-market strategy and product market fit. So I don't think we take like a ton of credit, but we're excited about what it can bring to our ecosystem.
How involved were you with the Polymarket team?
I don't think Colin are like super involved there. I'm a user, or no, I would be a user if I weren't a U.S. resident. But I'm, obviously on it all the time now. It is like such an important piece of information when you're looking at like the elections overall and just the political landscape. It's so fascinating.
Yeah, it is. It is. Excellent. Well, Colin, Matt, always a pleasure. Thank you so much for sharing everything that's happening from a institutional adoption standpoint, from the new community program, as well as on the tech front. We certainly will keep a watch out for all things Polygon going forward, and look forward to next quarter's call.
Thanks, Heidi.
Thank you so much.
Thank you.